day. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, and we are freezing. It's November 12, 2019. I'm laughing. I woke up this morning to 7 or 8 degrees. The high in Chicago is not 19 yet. We're hoping to get there this hour, and that'll be it. So we're setting records for cold in terms of the highest degree we got today and the lowest that we got. Welcome to, I guess it's fall, right? I don't know. You know, I'm watching what the grains are doing, and wheat's acting like a bottom might be shaping up, and corn just a bounce so far. We're getting a good bounce in bonds and notes. It's an interesting day because, you know, tomorrow they start the impeachment inquiry on TV at the House of Representatives, so everybody's going to glue themselves to that. And very quietly, we have Fed Chair Powell speaking in front of a joint economic committee tomorrow, and I'm wondering how much press it'll get. In any case, when you keep your focus on what's going on in the grains, the beans are just still lying down, but this wheat market came roaring to life. It really began in Kansas City. There's some seasonal spreads at this time of the year that are short corn, long wheat, and I wonder how many of those got underwater today as well. But in the weekly area chart of closes, just closing prices for soybeans, we're down for the first 2 days of the week, 13 3/4 cents. We began a correction from this peak up here in the 939 area, and we've just been settling back with support, potential support at the 18-week moving average of closes in red. That comes in around 890.5. When we take a look at a daily chart, you can see how the market's been stepping down in price, and that's what it's been doing here as we get into this weather, as we get into the size of the crop. And now, with this really cold weather, any ground that might have been mushy from wet weather, it's frozen. So in many areas, this is going to benefit getting the last of the crop, and as they get all their equipment out there into the fields to scoop what they can. And the market's not even getting a bounce out of the soybeans on this news. You're at an area under the 200-day moving average of closes, this gray line, and the 100-day. The 100-day in grains gets more play than the 200-day, but as you can see, as far as I'm concerned, you're caught between those two in a downtrend. When we look at the Bollinger Band, that number is 917. You finished at 917, so you're just laying down on top of it. Remember what a Bollinger Band is. This black dashed line here and here represents an algorithm designed to keep the market trading within it 95% of the time. So if you go back and look at your charts, it's not going to stay out of it very long. And as long as it's moving down as much as it is, I have no reason to suspect that somewhere between this 100-day average and that number is some layer of support. In momentum, we have an oversold market where for today, both numbers are under 20. Now, if we go back and look at yesterday, they were not under 20 nor the day before. So we are still just oversold. Oversold markets either rally to correct, go sideways to correct, or go down to further embed. Embed means both of the numbers do as they're doing now. They get under 20, but you have to do it several days in a row according to my rules. And then you change the word from oversold to locked in. And once it locks in, it generally, the way it did on the upside, it accompanied, because it was on the upside here, higher prices, and when it locks in, lower prices. Can it reverse? Of course it can, and it will. What will happen when it's on the upside, the red line will get underneath 80. When it's on the downside, where we are not embedded, it'll get under 20 and then pop over the 20. The red line will do it first. You're not there. So you're in a downtrend into a support zone. That's all you can say about it. And the market is very oversold. In the meal market, we have in place lower highs, lower lows. That is bearish. You can see the two resistance points are the 18-day moving average in red and the 100-day, so between 304.20 and 305.10. But I'm always bothered when I get this pattern. Let me show you the pattern I mean, because you may not see it. Yes, we have, if I'm correct here, lower highs. I'll come to this high. That's 306.60. And this high was 306.40. But with today's action, I could also argue I have higher lows. So I have a pattern lower high, higher low. To me, that represents a stall. The market is in a territory of oversold. One of the numbers is under 30. Any number under 30 in those means I'm oversold. Any number over 70 means I'm overbought. And then we get into the embedded part. So in looking at this, even if you go down under 330 to reestablish the pattern of lower highs, lower lows, I'd be into the lower Bollinger Band support zone and still in an oversold area most likely. I'm not comfortable there. In the oil market, I'm looking at this break as an opportunity for longs eventually. Remember what I said. This is the time of year where you start looking for the oil to gain. And this pullback often signals you're beginning that feat. I know it sounds so different from what I'm saying, but typically you either going sideways or you had a rally and you're correcting. That's what you're doing. Are you in a trend down right now? Absolutely. You've got lower highs, lower lows. Seasonals do not guide me. Chart action guides me. I look at seasonals just as another tool in the box. No more than that. So right now, downtrend, you'd have to get back over 31.89 to break it. You can negate it temporarily by closing back over 31.09. But if the bears push the market, number one, it could go from here down to the lower Bollinger Band, or it could start stalling out right here. I seriously doubt it's going over 31.89, 80 points higher without any news behind it. But that news can come out of left field. You just don't know where it's at. At this point, bearish. Corn market, lower highs, lower lows. Remember what I was saying, this market's running the lower Bollinger Band. Now when I look at these numbers, both are under 20 today. Yesterday, both numbers under 20, the day before under 20, the day before under 20, day before not. So we have what's called an embedded reading. The market converted from being oversold to locking in the downtrend. What you don't want to see is the red number pop over 20. And the fact that the market closed near the highs of the day today tells me that when you're reopened, the pressure is going to be on the math of the slow stochastic to try to lift. So you open one or two higher, you can lose that. So I'd be watching very carefully if that's the case. If it is the case, then I'm looking that, okay, the market got cheap enough here where you're getting some short covering in the market, and if they wanted to lift it, you might go to 384, wherever the 18-day average in red comes in, but that means I have to look at the last rally high, and that number was specifically 385. So even if it gets to the 18-day average, it's not going to be over the 385, and that number tonight is probably going to drop a little. As you can see, it's been dropping anywhere from a penny to 3/4 of a penny a day. So we'll see if it does that tomorrow too. Interesting point, I would be waiting to see what the slow stochastic does on the opening. In the wheat market, you have a pattern here of a higher high, lower low, just missed hitting the lower Bollinger Band on the 100-day average, and you've gone back to neutral. What's the neutral number on a chart? You should mark down that the neutral number is the 18-day average of closes. And if the market stays at that 18-day average of closes, well, what you get is a market that's just whipping around it. How many days have we hit this 18-day average? Today, not yesterday, but the day before, day before, day before, day before, day before, day before. Are you getting the message? We're really not trending. The market, when you look at that and you see that it keeps coming to it, it's telling you it's not in a trend basis. In the sugar market, interesting action. The 100-day average has taken over the resistance on the chart. You can see that. Pullbacks to the 18-day average are finding support. The swing line has a pattern right now of lower highs and lower lows. That's bearish. However, because the market's over the 18-day average of closes, the bias is to the upside. When the swing line is down and the bias is up, they counter each other. Then I take a look at where momentum is. It's overbought. There are times you don't have to trade. In the coffee market, well, we're at the beginning of the correction. You lost the embedded reading. Now, if I come back on the chart, you see it's not lost. This was that arcing yesterday I was getting a little concerned about. And like in the corn, you notice where the market finished near the low of the day and it was starting to arc down. Well, today it lost the embedded reading. When a market loses the embedded reading, that means more than 3 days over, both numbers over 80, and it starts down, it puts into its, let's call it the sight of a gun. It's got that right here at the closest moving average. Well, they're about identical, 105.63 to 105.57. So this 105.60 area, I'll round it off. If the market doesn't get a pop early in the day tomorrow, odds strongly favor price in the 18 or the 100-day average. The closest of come together right away. We'll see if that's the case. In the cocoa market, is this the real breakout? It's got the feel of it. We've been talking since back in September when the Ivory Coast and Ghana had gone into a funding for farmers program that the trade was trying to figure out how do they work with that, and they were taking cocoa out of New York warehouses rather than buying abroad. Now there appears they've taken those numbers down low enough where this is a breakout, and until you get back under these numbers, I think they've done a resolution of it. Now you'll say, Ira, the market's overbought, and I agree with you. But when you have sideways action like this, the only way you come out of it, typically to the upside or downside, is if it's on the upside, you're going to get overbought right away, to the downside, oversold right away. The question is the legs. And a lot of analysts are going to say that's a breakout from that sideways action. We'll find out a lot more tomorrow, but I certainly would be very concerned if I were bearish. In the cotton market, notice the sideways action going on here. We've just ground this market like this. We're plowing sideways on through this market too. The trend is up, higher lows, higher highs. The bias is up as you're over the 18-day average. That gets negated if you take out 65.50. And if it continues with this bias, I would expect to see that upper Bollinger Band hit. Momentum not even close to being overbought. I say the bulls have control at this point. Cattle market. It's a market that's been embedded for a very long time. We're starting to get a little bit of stall action in the price. If you notice that you're just sort of grinding right here, could be a sign that this market's tiring a little bit. Trend is certainly up. Buyers, until they lose the embedded reading, will probably show up on the dips. That's what I'd keep my eye on. In the feeder cattle, trend remains to the upside. Unlike the live cattle, this is a much fresher embedded reading. You still have the pattern higher lows, higher highs. The bias up, you're over the 18-day average. You have the embedded reading. I still say this market on the pullbacks is being bought. And wow, did the hogs come alive today? They certainly did. You'd have to go back into the middle of October almost now to see when the market was last over the 18 and the 100-day average of closes. The trend is up. The bias is up. Momentum is up. We've gotten to the line here. If it can keep going, maybe it gets to the upper Bollinger Band. Support the combination of the 100-day and 18. You haven't had a crossover yet. The 18-day is still under the 100. It's only by 5 points, but that's still under. So I'm trying to figure out what does that mean, but certainly going home, I think the bulls grab control of that market. We're not going anywhere right now in stocks, as you can see. Remember, we're all going to be enamored tomorrow with the TV in the House hearings. Now, for those of you that like to trade stock indices, and there's plenty of you, whether you're in the meat markets, whatever, I think these micro stock indices say a lot. Now, I had one person write back, because, you can write me notes, if you will, on YouTube, and I looked at it, and they're going, they're not worth the time and effort. Okay. They traded 120,000 of one of these today. Today. Okay, 50,000's normal. 100,000's normal. So you might not agree that they're worth your time and effort, but there's a lot of people out there that want to play in the stock indices, long or short, and they're looking for ways without risking the family fortune sometime. I am not saying this is for everybody. These micros trade about 15 to 20% the volume of the full-size contract, but that's huge in what it's doing. And the spread difference between where they're at and the futures contract, it's almost for those of you that traded those mini grains. You know that if you get them out of whack, the arbiters are there in 2 seconds. They'll put together the contracts. Well, they made these fungible at the Merck. So if you bought 10 of these, you got it against the full-size contract, the Merck honors that. Very interesting as to what's going on. And this gives you an idea of the minimum tick. So if you're looking to get into these Santa Claus plays that so many people talk about at the end of the year, this just could be a way that you look at it The commission is $1 a side. So when you look at the minimum tick and the commission, come on, you're right there. We tried to price this as fair as we could and still service you. So how do you see more about it? You go to our website, which you're used to at www.iraepstein.com/ this time, add that micro. We don't want to create a page yet for it. We want you to be able to see it that way. You can also get to that page if you're watching me on YouTube by clicking right here, this icon. It'll get you there. And of course, the old-fashioned way. We'll be happy to talk to you about it. Give my staff a call. They're there to service you. I'm Ira. You have a good day, and I'll talk to you tomorrow.